guys, welcome back to the channel. So this would probably be the second video. Yesterday I filmed the strategy video, but I understood that there's no there's no prerequisite for that video. So in that video I did say that I'll give a couple of links in the description to understand the basics. But when I went through like other videos, there was no like one video to explain everything for that strategy. So this is that video, right? So this will cover like the very basics for that strategy. So make sure you watch this video and then watch the strategy video. So let's get started. I'll just share my screen. Cool. So let's explain like what is the stock market, right? So for example, companies come to the stock market for getting in investors. For example, let's take a company, Tata Motors, right? And this is no stock recommendation or anything. I'm just using this as an example. So Tata Motors is right now at, let's see. So Tata Motors, and this is TradingView. I gave a link in the description for another video which explains about technical analysis. So you guys can go check that out and watch this video, and you guys should be ready with your basics. So right now Tata Motors, it's at 382. So I'll just round it off to 400 to explain it easily. So I'm right now Tata Motors is at 400, right? I personally think, for example, that Tata Motors will move up. So what I'm going to do is I'm going to buy Tata Motors at 400. And for example, if it reaches 410, I think that okay, this is enough for me, and I'll sell it. So I bought it at 400 and I sold it at 410, right? What will be my profit? So my initial initially when I bought it was 400, and then when I sold it, it'll be 410, correct? So it'll basically be 410 minus 400, which is 10 rupees. So my 10 rupees is my profit multiplied by the quantities I got. So if, for example, if I got 100 quantities, my profit would be 1,000 rupees, right? This is simple to understand, right? So I'll just take you to a terminal. For example, let's use FYRES right now. So this is what I use, but you guys can use FYRES, ZERODHA, UPSTOX. You guys can open an account in the find the link in the description to open your account. So yeah, what we can do is so you go here and type Tata Motors, for example, and this is going to pop up. So it's over here, right? What you go do is you right click and choose trade, and then you can buy the stock. So how many, you just put in your quantities, and here it'll be showed, the required amount will be showed, and you can just buy it, right? You can either intraday trade it or invest it, right? The next thing. So this is if I think the market's going to go up, or in other words, the market's bullish, right? So if someone says the market's bullish, they're using like fancy words. It basically means the market's going to go up, right? Let's take another example. So if you guys noticed here, there's already an option to sell Tata Motors, but I don't have Tata Motors in my stock list. So how can I sell them, right? This is where the concept of short selling comes, right? So in the previous example, I thought Tata Motors is going to go up, so I bought it. For example, if someone thinks that Tata Motors might come down, so currently Tata Motors is at 400. I think the Tata Motors might come down to 350, right? So I sell probably 1,000 quantities here again. And the difference of this, which is 50, would be my profit. So it'll be 1,000 the quantities multiplied by 50. So the difference of how much you held it. So yeah. So in the previous example, we thought the market's going up. So we bought it. So we bought it at 400. And when it reached 410, we sold it. And we held it for 10 points multiplied by our quantities. In the next example, I think that Tata Motors might come down. So what we can do is we can say, hey, that I'm planning to sell it at 400, and suppose the market comes down to 350. The difference of this is 50 multiplied by quantities. For example, 100 quantities. Your profit would be 5,000, right? So this is an example for buying stock, and this is an example for shorting a stock, right? So you can short it. I can show you how to short it really quick in the terminal. So go to trade again and sell Tata Motors. You can either intraday trade it or invest it, put in your quantities and your price. So right now the buy price could be 400. And if the market comes down and comes in your direction, you'll make your money, right? So you can not only make, so people have a perception that they can make money only when the market goes up. No, you can also make money when the market comes down. But the thing about short selling is you can only do it in intraday. You can't do it in positional unless you buy a option or a futures contract, which I'll come into. Right. So that's the basics. If you're a very if you're a beginner in the stock market, this should be this and the video I linked in the description should be more than enough. First trade it, get a hang of the market, and then you can go into advanced concepts like options or futures, but this should be fine. That's it, is basically what you need to trade in the market, right? Moving on. So this is going to be the basis for my next video, which is a strategy video. So I want you guys to listen carefully. If you guys don't have the time right now, click off the video, maybe add it to your watch later or like the video and watch it when you have time, because it's going to be a very important video and it's going to be the prerequisite for the next video. So let's get right into it. So each stock or an index, right? An index could be Nifty 50 or Nifty 100. Nifty 50 is the first 50 companies which are in Nifty. So Nifty is Indian market. So the first 50 companies, for example, Reliance, Tata Motors. So the first 50 companies which make Nifty is the Nifty 50, then the first 100 companies, and then first, like it moves on to 500, right? That's an index. So index can be Bank Nifty, all the banking stocks of the market, right? That's an index. What's a stock? For example, Tata Motors or Reliance. All these are stocks, right? So a bunch of stocks basically make an index, right? Okay, so moving on to options and futures. So each stock and index, like I said, would have two derivatives, right? What's a derivative? So this is the price of, so I'll just come into it. So it'll have options and futures. So both of these are derivatives. So what's a derivative? These values are not the original values of a stock or an index. These are derived value from the original value, right? So that's a derivative. So for example, um, let's take Tata Motors again. Tata Motors is a stock, right? If you go into FYRES and right click again and go to option chain, this opens up, right? And it might look like very complicated or anything, but don't worry about it. Do you see here LTP and here LTP? It's basically the price, so the derived price, and there are there's something called the strike price here, which is the um, value of the stock. So there are a bunch of strike prices, and there's also the last traded price for the option, right? And here, do you notice that it's way below the initial value of the stock or the original value of the stock? So that's the derived value, right? And you may ask, how is the value being derived? There are multiple reasons why it's getting derived. For example, time value. Uh, those are called option Greeks, right? So time value or gamma, alpha. So all those are stuff, but we don't really need that in this video. It's a very basic video. So moving on. Mm, So for the strategy, I explained options. So that's what I'm going to do in this video. I'm just going to focus on options. If you're a futures trader, this video might not be helpful for you. But if you're into options, then yeah, you guys can use this video for understanding the basics, right? Okay. So let's see. So the two basic things for an option is CE, which is a call option, and PE, which is a put option, right? So let's explain what are these phrases. So if I think that the market's going up, right, what I'm going to do is I'm going to buy a call option. Simple, right? And if I think the market's going to go down, I'm going to buy a put option, right? So that's the basics. So a call option means you think the market's going up. A put option means you think the market's going down. But if you guys noticed here, so do you guys see here a call option, a put option, the last traded price for a call option, which is basically the price for the call option, or the last traded price for a put option? Forget about the volume, OI, OI. So just see this column and this column. There's one more column you need to see, which is the strike price. So do you see that there are multiple strike prices here? And for each strike price, the price of the option is changing. Yeah. So what you need to do, the catch in options is you also need to decide the strike price, right? So, and there's one more thing for options is that the option expires uh, every like so there's a for expiries there's a weekly expiry and a monthly expiry. What does an expiry mean is the option contract is squared off, like it's not valid anymore. That's what basically an expiry means. So you need to close your option position before if you choose the weekly expiry before every Thursdays, and if you choose a monthly expiry, it's the last week of the month, the Thursday of the last week of the month, basically, right? So if it's a weekly option, it's every Thursday. And if it's a monthly option, it's the Thursday of the last week for the month, right? So that's what's expired. Moving on. So what's a strike price, right? So here's the thing, right? Um, So what if let's just pick up some random number. So we think that the market's at 400. So let's just pick up 405, right? Okay, just a second. Yeah, sorry about that. So let's just pick up 405, right? So 405, for example, let's take CE. What this basically means is what I'm going to tell you is how to read an option strike price. So, so let's just go here and buy it. So I'll first take an example of a call option. I go here and buy it. So do you guys see here? It's basically written that Tata Motors on 23rd Jan, which I talked about is the expiry. If you go see 23rd Jan, it's on a Thursday. So this is the expiry for this option. The strike price is 390 and CE. What does a strike price mean, right? So right now, Tata Motors is at 400, right? I think Tata Motors is going to go up, right? So what I'm saying is not only I'm going to say that the market's going up, the second thing I'm going to decide is what is the price in which Tata Motors will be above. So if I say that, so I'm going to say, for example, buy Tata Motors 23rd Jan 390 CE. So this is something over here, right? What this is, Tata Motors on 23rd Jan is going to be about 390. So call means bullish, and it's going to be about 390, right? In case your analysis, or if you think that it's not going to be about 390, you can always choose lesser strike prices. But in case if your analysis doesn't work, your your option is going to come to zero. So right now, if you notice that the option is at, for example, 10 rupees, on expiry, this option is going to go to zero unless this is not met. Moving on in detail for that. So there's this thing called ITM and OTM. Okay. What does ITM mean? ITM means in the money, and OTM means out of the money. Okay. And if you guys feel that this is really complicated, just maybe watch it again and you guys might understand it better, or you can ask me questions in the comment section below. So what's an ITM option? So right now, Tata Motors is at 400, right? So the price of Tata Motors is at 400. In the money, what does this mean? And we are going to explain this for CE, okay? I'll give an example for PE right after this. What's in the money? So is Tata Motors about 390? Is this true? Yes. Is Tata Motors about 380? Yes. So whenever the condition is true, that is in the money. Let's take another example. Is Tata Motors above 410? Is it? No. So this is not in the money. So 390 is in the money, 380 is in the money, and anything below that is in the money. So in the money basically means in the range. So is it below, or is it satisfying? Is it true that this condition is true? So if you're saying CE, you're telling that the market's bullish, right? Is this condition true? Is it above 390? Yes. So that's in the money. What's out of the money? If the condition is false, that means it's out of the money. So in this case, 410. Is Tata Motors above 410? No. So this becomes out of the money. Is Tata Motors, so for example, 45. Is Tata Motors above 45? No. So 410 is an OTM option. 405 is an OTM option. So for example, right, if Tata Motors moves to 410, does 405 still stay OTM? You guys tell me. Does 405 still stay OTM? Write it in the comment section below. No, right? Because is it any more valid? So let's ask ourselves. So the current price for Tata Motors is 410. Is 405 above 410 or below 410? Below, right? So the condition is true. So 405 becomes ITM. Let's take a quick example, and you guys tell me right now for this. I'll take an example for put. Okay. So let's divide it ITM and OTM and strikes. Okay. So, and the current price is 400. Okay. So let's write a bunch. So 410. Give me a number. 405, 400, 390, 380. Okay. So all these numbers. So you guys tell me. Okay. So right now, so first thing, what does PE mean? If you guys understood this slide, we think that PE means the market's going to go down. So that's the first thing we see. So what does this mean? PE means the market's going down. So we need to see if conditions satisfy the bearish market. So 410, is Tata Motors below 410? True, right? So whenever the condition is true, what is the option? Is it an ITM or an OTM? It's an ITM option. Perfect. Okay. 405. Is 405 so bearish, right? So is 405 above 400? Yes, right? So ITM, true. 400. So this case is a bit different, right? Um, it's neither true nor false. It's like in between. So we call those options as ATM or at the money, right? So in the money, at the money, and out of the money. Okay. 390. Is the condition true? Is 390 above 400? False, right? So it's an OTM option. So whenever the condition is false, it's an OTM option. Whenever the condition is true, it's an ITM option. 380? No, right? So again, OTM. Guys, I hope you understood this, right? So I explained a call option. I explained what's a put option. I explained ITM. I explained OTM. And I explained when are expiries, right? I explained what is short selling and what is buying, like normal buying. So you guys basically understood options. Here's the catch. So this is like a prerequisite for my video. This is related to the strategy. I explained a concept for buying call or buying a put option. What if I say that we can short a call option? Here's where it gets crazy, right? But why would you short a call option when you can buy a put option, right? Isn't it the same thing? So what does buying call mean? That you think the market's going up. What does shorting mean? That shorting a call means basically you think the market's going down. But you'll ask me, Sashrik, isn't it easier if you just buy a put option instead? Here's the thing. Like I said, there are different factors which affect the option prices like gamma, alpha, etc. And we know that all out of the money options expire to zero. So, for example, if we say if we buy Tata Motors at 410 CE, right? And so right now the price of Tata Motors is 400. Quick question, you guys tell me. Is 410 ITM or OTM? Is the condition true or false? False, right? So because is 410 below 400? No. So what is 410? It's an OTM option, correct? Here's the thing. Like I said, all option prices expire to zero. So in case, no matter what your analysis is, if your option price even reaches, if the strike price even reaches 49, by expiry, your option price becomes zero. So imagine you bought it at 15 and the market's going up, right? Your view is right, but your strike price is wrong, correct? So it looks like a wrong. So your view is right, but you were that close, but your option still expires to zero for buying. Here's the So what we are going to do is we are going to take advantage of this by shorting it, shorting out of the money options based on our view, whether it's bullish or bearish, right? So that on expiry, you get the full value as long as it's satisfying your levels. So if you say 410, as long as it stays below 410, so if you say 410 CE, you think that the market's bearish, correct? Because if you buy 410 CE, you think that the market's bullish. But the opposite is you think that the market's bearish. So as long as it satisfies this level, or as long as it stays below this level, you guys make the entire money. So if you guys shorted this option at 50 rupees, just by doing nothing, just by predicting where the market won't go, you make this entire money. But if you go here, right, and I'll just quickly come to this. So we are going to be trading in Bank Nifty. So I'll take quick examples for Bank Nifty and then I'll close the video. But if you come here and, for example, short an option, do you see that the required margin is around a lakh? That's a lot, right? A lakh. That's a lot. So whatever. That's a lot. I'm going to show you a way in my next video to get that value to 30 to 50K. So you can short options in 30 to 50K, and I'm going to show you how in the next video, which will release in 2-3 days. So look out for that video. Okay, just to summarize, I'll give examples. So we are going to be trading in Bank Nifty. I explained it in detail in the next video, but yeah. So I'll just take examples from Bank Nifty quickly. Um, so Nifty Bank. So I'll quickly go to the option chain. Right now, the price of Bank Nifty is 42,100. Okay, so 42,100 is the current price. So what we're going to do is a call option, a put option, and different strike prices. So 42,200, 42,300, 42,000, maybe 41,900. Right. Okay. So these are different examples: call option, a put option, and so a quick thing, right? The current price for the Bank Nifty is 42,100. So let's take two views: bullish and bearish. quickly tell me, right? So if I'm bullish on the market, so CE, is 42,200 an ITM option or an OTM option? Quickly, if I'm bullish on the market. It's an OTM option, right? Because is 42,200 above 42,100? Yes, the condition satisfies. Is 42,100 above 42,200? No, right? So it's an OTM option. So what's 42,300? Again, an OTM option. 42,100 is a ATM option, and this is an ITM option because is 42,000 under 42,100? True. So ITM, and this is also an ITM option. Perfect. Now we think that the market's bearish. Quickly, so 42,000, is it ITM or OTM? So current price is 42,100, 42,000, right? So is it below or above? Does the condition satisfy or not? 42,000. So if you see so there's an easier way to see this. So if you go to the charts, the current price is here and you're saying 42,000. So it's under, right? And your view is bearish. So it has to still reach that level. So if it has to still reach that level, it's an OTM option. 42,100 is the current, 42,000 is again an OTM option. So this is for 41,900 and 42,100. 40 and sorry, this is for 42,000. What about 42,100? It's an ATM option. 42,200 ITM. Why? Because if you go back to the chart and you think that the market's bearish, right? So if you see 42,200, which is, so we are thinking that the market's at 42,100, right? So 42,200 is somewhere here, right? Somewhere here. So does it like, did it cross the level? So once it crosses the level, it is in the money, right? In the level. So in the money, 42,300, it's deep in the money. So basically in the money, but deep in the money. So what we're going to do is another quick thing. Um, um, yeah. So if we think that the market's bullish, we are going to short an OTM PE. So always remember this. When you're buying PE, what does it mean? That the market's bearish. So bullish means just the opposite. So that's for selling. So selling an OTM PE means bullish. And bearish means selling an OTM CE. Right. So if you go back to the thing, what's an OTM? So if you're bearish on the market, what are you going to do again? If you're bearish on the market, you're going to short CE. So you're going to short one of these options. And if you're bullish, you're going to short one of these options. So I'll just write that down. In the previous example, so if you're bearish on the market, I'm going to short an out of the money option. So going back to the chart, let's see what's an out of the money option, right? So 42, right now market's at 42,100, we said. So what could be an OTM option? Maybe 42,300, right? So an option could be 42,300. And for shorting for a bearish market, sorry, for a bullish market, out shorting an OTM option could be 41,500, right? So that's about it, guys. I'm sure you guys hopefully understood this. If you guys still didn't get this, maybe watch the video again, understand what's an ITM option, what's an OTM option. Make sure you practice it in the live market. So just open the option data. You guys know how to read the option data right now. So there'll be a call option to the left, the put option to the right, strike price in the middle, and LTP. Just practice with like saying yourself what could be an ITM, what could be an OTM. If I take this, what could be the opposite? For example, how could I short sell this and etc. Right? Um, so this is just a disclaimer. This is a video to explain my strategy. I still didn't explain how to read an option data or what is a perspective on the option data. This is a video just to this is a video for like a prerequisite to my strategy. So it might just be covering pieces of everything and not like the whole thing, but I'm using this video as a tool for my next video. But if you guys really want to learn in deep on what's options, how to read the option chain, this is not the video. This is just a quick thing on learning options and implementing the strategy, right? Saying I think that's about it. Hopefully you guys understood this, and I will see you guys in another video. Thank you so much for your time. I'll be uploading the strategy video in 2-3 days. Hopefully you guys like this video. If you guys liked it, please like, share, and comment. Other than that, thank you so much. I'll see you in another video.